In today's video, I want to teach you how you can use Fibonacci levels in your trading strategies. This is the ultimate guide to Fibonacci trading tools and strategy, covering every details about Fibonacci levels and the most common Fibonacci tools like Fibonacci Retracement, Extension, Arcs, Fan, and Time Zone. Alright, first let me explain very shortly what Fibonacci is. For those of you who are wondering about Fibonacci, it's simply a series of numbers, but not just an ordinary series of numbers, and there are lots of magics behind the series of numbers. Fibonacci series start with 0 and 1, and after that any number that is added to the series is simply sum of the two previous numbers. So the next number is 1, which is sum of 0 and 1. The next number is 2, which is sum of 1 and 1. The next number is 3, which is sum of 2 and 1, and we continue like this. And this is how a Fibonacci series look like. But this is not all, and there are amazing facts behind these numbers. If we divide any number by the previous number, the result is approximately equal to 1.618. Actually, when we move forward and the numbers getting larger, the result getting closer and closer to the 1.618. Now, if we divide any number by the next number, which is actually larger, the result is approximately 0.618. And similarly, the result gets closer and closer to this 0.618 as we move forward and the numbers getting larger. And if we divide any number by another number 2 places higher, the result is approximately 0.382, and similarly with the result getting closer to this as we move forward and the numbers getting larger. And also notice that 1 minus 0.618 equals 0.382. And finally, if we divide any number by another number 3 places higher, the result is approximately 0.236, with the result getting closer to this as we move forward and the numbers getting larger. The ratio of 1.618 is called golden ratio, and 0.618 is the inverse of golden ratio. As you can see, Fibonacci numbers are not just an ordinary series, and these Fibonacci ratios are extensively found in nature, biology, and architecture. For example, you can find these ratios in human faces or animal bodies like snail shells, or they can be found in flowers, fruits, formation of rocks, spiral galaxies, and many other examples that are a kind of associated with these ratios that are generated from Fibonacci numbers. Alright, now you may wonder what is the relevance of these Fibonacci ratios to trading in financial markets. For unknown reasons, these ratios found application in financial markets and they act as support and resistance levels on the chart. Now you may wonder, how is that possible? How they work as significant levels? Please pay attention that on one hand they are used for a very basic characteristic of financial markets, which is we have pullbacks and the price doesn't go up or down in a linear direction. And on the other hand, because many traders use these levels and they believe that these levels work for any magical reason, these levels become self-fulfilling, and in practice you see that they actually work. And this is because of all the pending orders and trading actions that happen near these levels. Alright, now let me teach you how you can use these Fibonacci ratios to identify support and resistance levels on the chart. In these days, you can easily access to some tools on your trading platform to draw Fibonacci levels on your chart. This video is recorded on TradingView platform, and I'm going to explain some of the most commonly used Fibonacci tools that many traders use in their trading strategies. Let's begin with Fibonacci Retracement, which is the most popular one among traders. Fibonacci Retracement helps us to anticipate the extent of correction or pullbacks on the chart. In other words, when the market is making a pullback, it helps us to know where the price is probably going to stop and turn back again in the direction of the prior trend. After selecting Fibonacci Retracement tool, we should find the recent swing highs and swing lows on the chart. For example, here you can see that we had a range market, and the range market is broken here, and the price was advancing after that. You can see that the price, after advancing to this level, after hitting this price level, it seems that we have a pullback, because it's not just like a short pause like this and the price is going to lower levels. Now, as a trader, you are interested to know if this is really a pullback or the price is turning to a downtrend. If it's a pullback, where it's gonna stop and reverse back to the direction of the prior advancing of the price. Fibonacci retracement can help us with this. We click on the starting point of the advancing of the price, and then we click on the most recent swing high that formed on the chart. As you can see, some horizontal lines are added to the chart, which are actually Fibonacci retracement levels with their associated ratios. As you can see, the only exception is 50% level. I mean this level 0.5, which is not a Fibonacci ratio, but it's also used alongside with Fibonacci Fibonacci ratios because of its importance, because based on dot theory, 50% of the prior movement usually provides a retracement level. Alright, I think you got what this is all about. The whole idea is that they provide support or resistance levels on the chart for our pullback. For example, here, since we were in an uptrend, these levels provide potential support levels for this pullback, or in downtrends they will be resistance levels in the pullback, which I'll explain them later in another example. So when we have a pullback like this, each of these levels are potential retracement levels, which I'll explain them now. The 23.6% retracement level is relatively small, and in terms of depth it's considered shallow, and most of the time retracement on this level is in the form of a flag or pennant pattern. Usually flag or pennant patterns don't go much lower than 38.2% of the prior movement, so this zone is considered small or shallow retracement zone. And as I said, most of the time when we have retracement in this zone is when we had a sharp advancing of the price, then we get a small correction to this zone before next advancing of the price, and usually the consolidation period is in the form of a flag or pennant pattern. The 38.2% to 50% is considered moderate, with 50% being the mid-level, which, as I said, based on dot theory, 50% of the prior movement usually act as a support level, and 61.8% retracement level is called golden retracement, and it's usually the last stop for the pullback if the trend is strong and it's going to continue its direction. And finally, 78.6% level is the critical level for the prior movement if it's going to survive and recover. For example, here you can see that the price came down to this zone somewhere near 61.8% level, and then we got a strong bullish candle approximately engulfing the previous candle, which is a bullish signal. So here at this point we could conclude that the pullback has ended and the price is going to advance. For more confirmation, you may wait for the next candle or breaking of this resistance level, which your trade entry totally depends on the level of risk that you're willing to take. To show you another example, you can see that after this advancing of the price, here the price started declining, giving us the pullback signal. So again, we choose Fibonacci retracement tool, and then we click on the starting point of the advancing, and after that on the most recent high that formed on the chart, you can see that the price declined to 50% level, and then we got a morning doji star pattern, which is a bullish pattern. So here we can conclude that the pullback ended and the price is gonna advance, and we continue like this. Please pay attention that in this case, after the pullback, we had instant strong advancing of the price, but in this case, after the pullback, the price went flat into a consolidation period before advancing, which here we could have a change in market expectation and then declining of the price. So make sure you always protect your account with placing stop loss below the pullback when you enter a long position. Alright, now let me show you how we do it in downtrends. Here you can see that we had a reversal to a downtrend, and usually at the reversal point of the market, we may enter in a wrong trade. For example, here in this case, following this uptrend, we expect this as a pullback and after that advancing of the price. So in practice, we would add Fibonacci retracements like this from the starting point of the advancing to the ending point of the advancing, and you can see that after hitting this zone, the price turned up but then declined and formed a downtrend. That's why I said you must use stop loss to manage your risk, or even decrease your risk with more confirmations. For example, entering a trade after breaking above this resistance level. And the important point is that you shouldn't take your trading decisions only based on these levels, and they must be used in conjunction with other tools and aspects of technical analysis. Alright, in downtrends, we do similarly. When we see that after declining of the price, we have signs of pullback, we choose Fibonacci retracement tool and we click on the beginning of the declining of the price and then on the most recent swing low that has formed on the chart. And these are the resistance levels, and we expect that the price will stop at these resistance levels and turn down. You can see that after hitting the 61.8% level, we had declining of the price. I repeat one more time the important point that I just mentioned. Fibonacci retracement levels are only alert zones, and for taking any trading decision, you must have confirmation from other tools and aspects of technical analysis. Alright, another Fibonacci tools that you can use for trading is Fibonacci Extension, which helps us to find out where the price is headed in the direction of the trend. So when we are using it in an uptrend, it helps us to forecast the new peaks or higher high after the pullback. For drawing it, we need 3 points. We click where the advancing of the price started, then we click where it ended, and finally we click where the pullback ended. So we use this tool, for example, when a pullback ended and we entered a trade, and now we want to know to what extent the price is going to advance after this pullback. These are resistance levels, and the important levels that you must watch are the ones that are starting from top of the advance, because top of the advance itself is a resistance level, as I explained earlier. And in this case, you can see that it coincides with 50% resistance level, and you can see that when the price hits this level, we got a short pause and red candle, but after that it could successfully break this level. In this example, you can see that the price went to this level around the 100% level, and after that it turned down. In practice, when we enter a long position, for example here, after we realize that the pullback has ended, with setting stop loss here below the pullback, as I explained earlier, if based on our risk management strategy, we want, for example, risk to reward ratio of 1.5, so we know that this is a probable resistance level and our target is below that. Or if we want, for example, risk to reward ratio of 2, you can see that our target is below this potential resistance level here. Please pay attention that these are just probable resistance levels, not guaranteed barriers. When the price reaches to around these levels, we have more reaction of market participants, which in one case, for example, for this level, it may not stop the price, but in another case, for example, in this level, it can affect it more significantly. Another type of Fibonacci tools that we can use for trading is Fibonacci Arcs, that in compared to the other two that we discussed, this one tries to kind of add a time element in the Fibonacci levels. In advancing of the price, if you want to know about the probable levels for end of the pullback, first you click on the end of the advancing and then beginning of the advancing, and as you can see, we have half circles that are extended out of this trend line. Similar to Fibonacci Retracement tool, these are potential support levels that the pullback may stop. The only difference is that here the levels are kind of dependent to time and they represent a more flexible zones during time. Here, for finding the potential levels for end of the pullback, we drew from end of the advancing to the beginning of the advancing, and if we do it conversely and we draw from beginning of the advancing to the end of the advancing, we can use it in a similar way to Fibonacci Extension tool to know what potential resistance levels are headed as a target price. But for this purpose, the more commonly used one is Fibonacci Extension tool, and for finding end of the pullback, also Fibonacci Retracement is a more common tool, and in practice they perform better. And the next Fibonacci tool that I want to explain is Fibonacci Fan, which for drawing it, we click on the starting point of the advancing and then the ending point of the advancing. And as you can see, we have a fan on our chart. Fibonacci Fan is used exactly like Fibonacci Retracement for potential support or resistance levels in the pullbacks. The only difference is that here we have a rectangle which is scaled based on Fibonacci ratios, and then we have these lines based on them representing the Fibonacci ratios. And the last Fibonacci tool that I want to show you is Fibonacci Time Zone, which is more related to time than the price. To draw it, we simply click on the starting point of the advancing and then we click on the ending point of the advancing. As you can see, the x-axis has been divided based on Fibonacci numbers and we have vertical lines based on them. And when you draw it, it's actually extended into the future, and gradually the distance between the lines increases, which is because of the characteristics of Fibonacci numbers. These lines show potential important areas that you must watch in the future. It's actually useful for more confirmation when you are using other important levels like support and resistance levels. Alright, in this video I explained Fibonacci levels and ratios and some popular Fibonacci tools that you can use in trading, but the important point that you must pay attention is that for taking any trading decisions, you must use them in conjunction with other tools and aspects of technical analysis. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.